All right, everybody. So let's dive right in. Remember all that talk about inflation? Everyone bracing for like another interest rate hike?
Yeah.
Well, get this. The Fed kind of threw everyone a curveball this week
Yeah, they did.
and hit the rate cut button.
I was surprised.
A hefty cut, too, 0.5%. No small potatoes there.
Not at all.
So we're diving into the Market Pulse Daily podcast from this past week, September 16th through the 21st, to like really break this whole thing down.
Yeah, it's a really interesting situation because it's not just, a one-off rate cut. This is like the Fed signaling maybe a bigger change in their whole approach.
Right.
They're walking this tightrope, trying to keep inflation in check,
Yeah.
but also not wanting to like slam the brakes on the economy completely.
Yeah, totally makes you think, are they aiming for that whole soft landing everyone's been talking about?
Exactly. That's the million-dollar question, right?
Right.
Can they actually pull it off? And then what does it all mean for you and me, for our wallets?
Exactly.
Because here's the thing. Interest rates, they impact like everything. Buying a house,
Oh, yeah.
getting a car loan, investing in the market, all of it. It's all connected.
It's all tied together.
Yeah.
So this is what everyone wants to know, right? The Fed cuts rates. Time to dump all our money into stocks.
I know, it's tempting to think that. And, historically, there's some logic there. We often see the market rally after a rate cut, especially when the economy is looking, pretty decent,
Right.
which it seems like it is right now.
Okay, so no need to like panic and sell everything.
No panic. But Market Pulse Daily brought up a really good point. It's all about nuance, right? So market valuations, those are already pretty high. Think of it like the stock prices. They're already kind of baking in a lot of good news about the future.
I see.
So the potential for like those massive, huge gains might be a bit smaller this time around.
So less of a spike, more of a slow and steady kind of thing.
Exactly. And they actually use Alphabet as an example. It's pretty interesting.
Oh, right. They highlighted them as like a potential opportunity, yeah.
Weren't people freaking out about AI chatbots like taking over the world, though?
Yeah, that was a big concern. But even with all that AI hype, Alphabet still like completely dominates the search engine market, right?
True.
Plus, they're thinking ahead, not just relying on search firming. Their cloud computing side of things is huge. Subscriptions are growing.
They even started paying dividends.
Dividends. Interesting. Isn't that a pretty big deal, these rate cuts?
Huge.
Yeah.
Shows they're confident about making money even if things slow down a bit. And for investors, that's like a nice little bonus.
Yeah.
Especially when other investments are looking a little shaky.
So it's like, don't just jump on the bandwagon because everyone else is.
Right.
You got to understand what's actually going on.
Understand the fundamentals,
Right.
the bigger picture. Exactly. Don't just blindly follow headlines. Think about what makes sense for you,
Yeah.
what level of risk you're comfortable with your own timeline for investing, all that good stuff. And remember.
Right. Diversification. Can't forget about that. It's like you always say, don't put all your eggs in one basket.
Exactly.
But Market Pulse Daily, they brought up something I hadn't really thought about. Reinvestment risk. What's that all about?
It's one of those things that's easy to miss, but it can really make a difference, especially with rates going down like this.
Fair.
So say you've got a one-year CD, right?
Yeah.
Certificate of deposit. It matures. You've earned a little interest. Great.
Right.
But then what? You want to reinvest that money, right?
Yeah.
But now with rates lower, that new CD is probably going to have a lousier interest rate. So you're putting in the same amount of money, but earning less over time.
So even if you're doing everything right, saving diligently, your returns can still take a hit.
Exactly. And that's another reason why diversification is so important. Market Pulse Daily specifically mentioned thinking about intermediate and long-term bonds right now.
Okay. Yeah, locking in some of those rates while they can. Makes sense. But bonds, real estate. We're getting kind of deep into the weeds here. This is more than just your average stock market talk.
I think it's a good thing, though, right? Thinking beyond just stocks. There's a whole universe of investment possibilities out there. And, Market Pulse Daily actually shared that they're slowly bunking up their own stake in Alphabet.
Oh, really?
Yeah, up to 4% of their portfolio, putting their money where their mouth is.
I like it. All right, so as we wrap up this deep dive into the Fed's big rate cut, what's the big takeaway? What should our listeners be thinking about?
I think more than ever, it's about staying informed, being strategic. This isn't a signal to make any rash decisions just because the Fed made a move. It's a chance to step back, look at your goals, think about your options, and make sure your investments are still pointing you in the right direction.
Don't just follow the herd, right? Think long term.
Exactly.
Love it. It really makes you wonder, though, what if this rate cut is just the beginning? Like, what if this is a sign of a much bigger shift in how we think about money and investing in general?
Now, that's a question worth exploring.
Right. We want to hear from you. Head over to our social media. Let us know what you think about all of this, any questions, anything that really stood out to you. Until next time, happy investing, and we'll catch you on the next deep dive.